I know we got some people, panicking. So the reason why I say that because we're going to have the tax professional to come back, Mr. James Hall, and he's going to share with you guys the cash flow manager portion. James, you don't have to rush. Take your time. I ain't gonna say take your time, but hurry up. But take your time and continue to do what you do. Okay,
absolutely,
ladies and gentlemen, the tax professional is back, Mr. James Hall. The floor is yours, sir.
All right, man. This has been phenomenal training. I'm privileged to be with you guys here on today. I just did a post, and I think it's key to understand when we talk about perspective. While most people are spending their time doing idle things today, we all took the time to be here to learn about finances. Why? Because we have a different perspective and a different way of thinking. And the goal is to be so infectious that other people are attracted to your way of thinking and your results, that you can start also building your business and growing cash, asset cash. So we're going to talk about record keeping. And mind you, I'm going to talk to you guys like you are my clients. So if I'm a little bold, if I'm a little blunt, please bear with me. But I think it's very, very important that everybody gain the right understanding when it comes to record keeping. So I'm going to start with a little PowerPoint, then I'm going to show you the cash flow manager. I'm also going to show you the cash flow manager inside of the PowerPoint as well. So let me share my screen and we'll get this show on the road. All right, so I call this basic record keeping. I shortened it just a little bit, but you'll see why. We're going to kind of talk about this. So let's talk deductions real quick. You got the travel deductions that are in publication 463. So for those of you who want to take a screenshot of this, you don't have to. I'm going to show you where you can find this information also in your back office. You got the operational expenses, publication 535. When it comes to travel, there's a certain way that you have to do things. You cannot go take a vacation just to take a vacation and then write it off. You have to have some kind of business intent, some kind of intent to market, and there's things that you need to be doing for business on a daily basis. There's operational expenses. So when it comes to operational expenses, we all have a monthly renewal fee. That is my econ. So if you are a guest or you're watching this and you're not aware, it is 100% deductible. So really, you do have the concept of the government footing the bill when you get a 100% deduction off of the $400 it costs to maintain this membership and get all this knowledge. Like, nobody would ever quit if they understood that. My $420, or depending on how much I pay for each plan, is 100% deductible. Why would I stop it? When I stop it, I lose access to knowledge. When I stop it, I lose access to the very deductions I was trying to say I wanted, right? Depreciation. We all understand depreciation. When you go buy a new car, the minute you drive it off the lot, you will not be able to sell it for that same amount. That is depreciation. But in the business world, we now are able to take that vehicle, apply some business perspective to it. Maybe we drive it for business mileage, and then now we can start taking a write-off for that vehicle in terms of the depreciation that it was going to lose. We can start depreciating that over a 5-year time frame, right? So when it comes to vehicles, depreciation is one aspect, as well as equipment, computers, and so forth. When it comes to wages, so many tax professionals tell you, look, your kids got to be at least age 6 or 7 to be able to hire them. And if we go to publication 15, I promise you, as well as you can see me right now, and I'm wearing a blue shirt, it literally says under the age of 18. So there's an issue with the tax professional industry where they are giving opinion instead of facts, right? But they don't want to teach individuals how to run the strategies via the facts versus their opinion. So under age 18, you have to know all that needs to be done to hire your children and make sure you're doing the right things every year to issue them employer statements, W-2s, and so forth. Auto is publication 463. So when it comes to a vehicle, you're going to take either the mileage, the standard mileage rate, or you're going to take the actual expenses. I tell people, record both. Record all your gas. Record your personal and your business miles. Record all the repairs. Record everything. And then when you do your taxes at the end of the year or with the professional, or the beginning of the year, I should say, they're going to help you determine what is best to take, right? Communications, publication 463. So we're talking about usually your cell phone and so forth and things of that nature. Meals is publication 463 as well. So we're going to go over some examples of how to record some of these in the cash flow manager, and office expenses. As you can see right now, I'm in my home office. My printer that's behind me, my banner, my projection equipment that's behind me, these are office expenses, or projection equipment I take for mobile when I was doing presentations on the road, even though I'm not traveling right now. But even my microphone that I just bought, that you guys are hearing this good clarity from, those are office expenses. It gets talked about in publication 587. When you are running a business, the whole goal is you have to keep good records. Why? Because you have an intent to make a profit. And the way the IRS distinguishes a business and a hobby is whether one has the intent to make a hobby or not, a profit or not. So a hobby is usually someone who's not going to be trying to grow their revenue, right? They're not going to be trying to expand their business. They're not going to be trying to grow a team. A business is you have an intent to make a profit and you show it in your record keeping. So let's go through this real quick. You can go to your back office in the documents, and you can look at Common Tax Deductions Info Packet, document 501. You can look at the training manual for minimized taxes. The information I'm talking about is right there. So literally, unfortunately, we have no excuse. All we got to do is make the attempt to look at the information and gain the right understanding. And I highly recommend working with a professional to develop a tax plan. I'm going to tell you why. So let's talk record keeping. It's one of the biggest problem areas for business owners. You got to know the deductions that are applicable to you. It solidifies that you are in business. So take this app, this cash flow manager app, and track your expenses and income. That solidifies that you have a business. So don't let nobody tell you, oh, I can't, you didn't make a profit, so you can't write off anything. That's not what the IRS publication says. It's an essential part of every tax plan. And let's be real, the receipt system is no longer a solution. You got to use the cash flow manager. So we recommend a cash flow manager. If you aren't aware, you have the option to sell this to other business owners and still make some income as a profit, right? But it's free with your income shifting membership. So let's look at this. When it comes to record keeping, the IRS wants to know what's the income type, what date did it occur, what is the amount, who did it come from, what was it for, and where did it happen, in any particular notes. Well, coincidentally, they also want to know the same thing for your expenses. What's the expense type? The cash flow manager comes preloaded with expense categories. And you can always customize it, but make sure you seek a professional before you customize it, because you want to make sure what you're customizing, what you're adding, is actually a tax write-off and deduction. They want the date, the amount, who the money went to, what it was for, where did it occur. And I tell people, always attach a receipt. I know the publications and the IRS says if it's under a certain amount, you don't have to have a receipt. But in the event of an audit, you want to have something to completely prove that what you did was an attempt to make a profit. So have the discipline, because we don't avoid the pain of discipline. When we do, it always comes back 100 times harder. So have the receipt and make a habit of attaching all the receipts. You want to keep excellent records. The more details, the better. For communications, right? You got a $75 Verizon bill. You're going to put it in the category of communications or create a category for cell phone, whichever one you prefer. Put the date. On June 2nd, I paid $75 to Verizon. What for? Cell phone service and data. Where? Either my city and state or online. Attach a receipt, boom. And with stuff like this, you can set up the thing to be recurring, so you don't have to keep entering it every single month. When it comes to my econ, on June 2nd, I paid $34.95 for my econ to my econ corporate for my income shifting membership, city and state or online. Do not record your stuff as cash flow manager monthly fee. Cash flow manager monthly fee is for if you sold the cash flow manager to somebody else and they are paying only for the cash flow manager monthly fee. We have to correct that often. It is a monthly renewal fee. If the IRS audits, they want to make sure everything is in the right category. So I'm sharing with you guys the right categories. Travel, airfare. On May 15th, paid $150 at Delta for a business trip. Annotate what kind of business you're going to be doing. So if you went back home and you're meeting with family, on a daily basis, and you just having some peeking and some passing, then you can put that as the annotation for your business trip. Business meeting with several individuals, start to name some names. The more details, the better. All right, home office utilities. I got to talk about home office. Your utilities don't go on the utilities. They go on a home office for your home-based business. On January 16th, 2020, I paid $150 to Dominion Power. What is it? It's an electric bill. Where was it? Winchester, Virginia, right? The goal to understand when it comes to home office, your home office deductions do not go on your Schedule C. I'm going to repeat that. You are not to write off home office rent unless you are actually renting. If you own a house, you cannot do home office rent. I need to make sure, I'm teaching you guys like you are my clients. You want to make sure you are not writing off the mortgage because you're going to get a separate form for mortgage that goes on the home office form. So home office utilities, gas, electric, water, they do not go on your Schedule C. And here's the reason why. If you put them on your Schedule C, they're going to give you 100% deduction. You don't want that because they're limited based off of the amount of your home office space. I have to tell my clients this often. Home office gets recorded on the home office form, and it feeds to the Schedule C. And if you do not have a profit in business, then you cannot use it necessarily in that tax year. It gets rolled over to carry forward until you have a profit. All right. So meals and entertainment on March 14, 2020, the amount was $40. We went to Ruby Tuesday. I had a business meal in Largo, Maryland. I met with John Smith for a presentation, attached the receipt, boom, automatic deduction. Because why? I have everything annotated. If the IRS was to ask me, James, who did you meet with? And I got to go back and try to figure out who did I meet with, that's going to be a problem. If I, pick and pass a waiter or waitress, I want to put their name and maybe take a business card and take a picture of the business card with the receipt. So if they decide to fact check me, they can say, okay, well, they called Ruby Tuesday, right, in Largo, Maryland. It's helpful to put, more the address if there's more than one. And they can say, hey, did John Smith work for you March 14, 2020? Well, yes, he did. Okay, that's all we needed to know. The whole goal is to keep your records audit proof, right? Track your expenses. You're paying your children wages. November 14, 2020, $500 went to Vincent Hall for wages in Fallen Waters, West Virginia. Take a picture of the bank transfer. Take a picture of the check that you are writing to them. Attach it. All right. Wages is a whole nother ball game that I don't have the time to get into today, but this is how it will look like. You got to make your records simple and keep track of them often so that they don't get behind, right? Business reports. The cash flow manager has all the reports. This is a sample of the annual report for test business. This is a sample on the right for the mileage report. You want to make sure you're recording your personal and your business miles. Let's be real. If you got one vehicle, you cannot write off 100% of the miles for business. Ain't going to happen because you're going to know that at some point you got to go drive for personal. And in most cases, you will never be able to write off 100% of the miles for business. There are only certain circumstances. If you have a car magnet, that don't fit the need that you write off 100% of your miles for business. So I'm trying to teach perspective here because when it comes to records, you want to make sure that you're doing the right things. This is a profit or loss form. You want to make sure that you're giving your preparer or you use all of these tools when you do your taxes. It has everything nice and neat. But if your preparer is only relying on your profit or loss, they're going to make a huge mistake. Why? Because there are various categories here. And as a preparer, we have to go through and do our due diligence to make sure somebody didn't put stuff in the wrong category that did not belong there. I have seen it multiple times. I had to correct it. And if I did not do my due diligence, then somebody else was have inflated deductions. I don't know if you heard that term before. So we're going to take a quick look here at the cash flow manager as I wrap this up. When you open your cash flow manager, this is what you want to see. I have monthly recurring expenses set up for my econ for this test business. Monthly recurring expense set up for the home office utilities. Why? Because once I click this, it's already pre-filled for me. So a lot of the stuff that you have that's monthly, set it up as monthly. You can do that at the bottom here. I'll show you in a different entry, but you can do that at the bottom of the entry. So all it has to do is pre-populate the information and you confirm and attach a receipt. So I can just come here and go to save entry and I'm good. Record keeping, nice and quick. My AT&T, right? Transportation insurance, wages. This is what it's going to look like when you have a full year's worth of tax record keeping finished. You give this thing nice and categorized. You can click this button right here if you guys can see it where it says printable view, and you can print a categorized report. You can print a mileage report. You can print the profit or loss. You have the annual report, and it saves all your receipts. This is a benefit of having a cloud-based system. It saves all your receipts that you can give to your tax professional. Now, I want to make a point here. If I scroll down, I look and I see that this person made $620 in business. Not too bad, right? They had $27,000 in expenses. What happens is we look at this number and we say, okay, well, I could just go ahead and adjust my W-4 and put $27,000. That's not correct. Why? Because some of this stuff is home office. And based off of the limitation for home office, I can only write off up to the limitation of what I produced in income unless I have a mortgage, which works out different. $12,000 is just for home office. So if I put $27,000 here, the only way this will work is if I erroneously put the home office stuff on the Schedule C and get 100% deduction. So I'm trying to teach, everywhere I go, the goal is audit proof. We don't need the IRS knocking on our door. We need to follow the instructions and the rules that are set in the publications to make sure that as we run a business, they give us all the deductions, all the tax savings that we can get, that we can keep morally, ethically, righteously, and so forth. So that's all I got for you guys. My name is James Hall. Mr. Hill, I appreciate you. I had to come back in. I just want to teach a little truth, a little perspective, a little knowledge, a little wisdom so everybody can elevate.